Hey, y'all, and welcome to the Cash Flow Podcast, where we're going to talk about everything related to the money in your small business. I'm your host, Pam, and without further ado, we're going to jump right into our episode.
Hey, this is Pam coming to you from Podcast Movement, which is a fantastic event and where we are doing our 4-show series called 3 Things to Do, which actually may be more than 4 shows because I'm kind of liking this format. This is the Cash Flow Podcast, and this is Pam to bring you what you need to know if you are an entrepreneur who's ready to hire help, but when you look at your financial statements, you have no idea if you have enough money to do it. Very, very classic problem. People get financial statements from their bookkeeper. They have no idea what they're telling them. So this is 3 things to do to give you confidence in making that next hire. What's thing 1? I want you to write this down. I want you to tell your bookkeeper that you want a 12-month trailing profit and loss statement every month. You don't just want a sheet of paper with this month's numbers on it. Here's what you're telling them. Any bookkeeper with their salt's going to know what this is. But so that you know what you're asking for, you want a paper with 12 columns across it. And in the last column is this month's performance, profit and loss statement. And in the 11 columns going to the left are the last 11 months of your profit and loss statement. So you can look and see, here's what my revenue's done over these last 12 months, month to month. Here's what the expenses have done month to month. Here's what my net income has been, because that's when you've put your numbers in context. And quite frankly, until your numbers are in context, all you're doing is wasting your time looking at the sheet of paper. A sheet of paper with numbers on it will never be of value to you. It has to tell the story of your business. And by putting it in the context of time, as I call this, now you're looking at the story of the business. Which months were sales great? Why were they great? I can remember that. I put a little more marketing into expense the month before. Oh, yep. I see the month before expenses were a little higher. And then all of a sudden my sales were higher. Oh, shoot. I see that in January and February, sales fall off the page. Why is that? Oh, let me connect that to my story. That's right. Because January and February, all of my people go on vacation to South Florida. So they don't need to buy my stuff in Pennsylvania anymore, whatever it might be. But what you want to be able to do is look at that 12 months and know your business story. And when you look at it, the revenue and the expenses that you see should align with the story you know about your business. Because I promise you one thing, as the entrepreneur, as the business owner, you know more about your numbers than any bookkeeper, than a bookkeeping system. So if you look at that story that the numbers are telling you, and it doesn't match with the story you have in your head of what you think happened, that's a disconnect that needs to be fixed. And you need to call that bookkeeper on the carpet right away, have that conversation, and get it fixed. Okay? Thing number 1, 12-month trailing profit and loss that tells you the story of your business. So what's thing 2, Pam? Fine, now I know what has happened. Here's what you can do now. Because you can see that ebb and flow of your business over the last 12 months, now I want you to think about just the next 6 months. What's going to happen in the next 6 months? So say this is now currently August, which it is here at Podcast Movement, August 2023, and you are getting your August financials sent to you. What you're going to get is a list of 12 columns that starts with last September, and there's a column for each month all the way up through August of 2023. And you're going to look at that and go, yep, this tells the story of my business. This makes sense. I see where my costs go up and down. I see where my revenue goes up and down, and I see why. So based on that, what do I think is going to happen for the next 6 months? Now, don't cop out on me. It's so easy to say, oh, Pam, I have no idea what's going to happen in the next 6 months. None of us have any idea. And what we put down on paper is probably not going to happen, but it makes us think about it. And I will tell you, as a business owner, you're more right than wrong about what's going to happen in the next 6 months, especially now that you have the historical context to look at. So just throw out there, hey, in the next 6 months, I think I'm going to make this much revenue, and these expenses are going to continue at the same rate they've been for the last 6 months, or it's going to be the same as it was this same 6-month period last year, whatever it might be. Write those out, see what your net income is. Now you know how much money you're going to have to spare if you did nothing else. But now, clearly, if you're ready to hire somebody, there's a reason you think you're going to make more money, you're going to get more time back, whatever it might be, all good reasons. So now layer that in on top of those next 6 months. So if you're going to add, $8,000 a month in expense, what happens to that net income? And you can see, oh, yes, I can afford this, or oh, no, I can't. It gets you out of that reaction of, geez, I've got money in the bank right now. I really think I could hire somebody, but will I continue to have money in the bank? This gives you that answer. That's thing number 2. So thing number 1, get a 12-month rolling profit and loss statement. Thing number 2, make sure that you take a look at what you think is going to happen in the next 6 months, because you know more about your business than anyone else. Add in that new hire that you want to get. See if it still works for you. Is it still making the money you want it to make? What's going to happen to your revenue? Will it go up because of that? Or are you actually doing this because you want more time in your business or time doing other things? So you're okay with letting the net income come down a little bit. This gives you control over what in making that decision to have a little more information on the table when you make it. Okay. What is thing number 3? Well, look at it 6 months later and see how you did. All right. You've just created a forecast. And I know creating forecast sounds horrible and ugly and something you don't want to do, but it's really pretty easy. It's what we just did in step 2. Now I want you to look 3 months in and say, well, how's it going? I thought this was going to happen. I wrote this forecast down for the last 3 months. How did I actually do? If I expected to be making more money, am I making more money? If I expected to have more time free, am I having more time free? And this is why in hiring people, I always do a 90-day probation period. It's not really probation like, hey, are you going to be good at this? Sure, there's a little bit of that. But it's also so that I can make sure and validate, was it the right business decision for me? I clearly wanted to hire this person for a reason. It was to free up more time. It was to make more money. It was to get more clients. It was to expand the experience on my staff. Whatever that goal and that target was, 3 months in, decide if it's actually being achieved. And then if you determine it is, great, you leave it and you go. It's a hell yes. Okay. But if it's not, stop and understand why. Might be for a good reason. It may be that they're doing something else and you're getting some other advantage that you never even dreamt of. But it may be that it's just not working. Not that they're not working, but that it's just not working. The plan you had for that role in your business just isn't working. That's a possibility. But you have time to deal with it because you've given them that 90-day probationary period and you're not surprising them in any way. And the other thing, and this is totally on an HR track, not on cash flow at all, but I can't get the COO out of me, sorry. Have conversations with that new person all throughout the process. You know what your expectations are of adding that position. You know how you're going to measure whether or not they're being achieved. Make sure they understand that too, right? Give them the information ahead of time because they may be able to tweak and adjust what they're doing if they know what your target is. And you know what your target is because you did the second thing, okay? So here are your 3 things to do if you want to hire somebody, but your books make no sense to you and the reports you're getting make no sense. Thing number 1, get a 12-month trailing P&L and make sure that that story that you see on that piece of paper is the same story that your gut tells you about what's happened in your business for the last 12 months. Number 2, make sure that you look at those next 6 months and go ahead and give it a stab at what you expect to happen if you hire this person. What is each month's revenue, expense, and income going to look like? And number 3, let yourself look at this and see how you did 3 months in and if it's meeting your expectations. If it is, hell yes, you keep going. If it's not, pick on why, find out why, and determine if that's an okay thing or not. And then a third I'm giving you a little aside here. I guess this is 4 things you can do. Make sure that that person you hire knows what the expectations are when you bring them in the door, so that they're working with your momentum the whole time as you get up to that evaluation period. That is the 3 things to do from Podcast Movement 2023. Hope you guys have a great day.
I hope that video was helpful, and I hope you subscribe to my channel for more information on finances in your business.